over there. Let's welcome in Prashant Thakur, Head of Research, ANAROCK Property Consultant. He's joining us from the Systematix Real Estate Conference. Sir, how is the overall real estate space panning out in terms of investor sentiments? How are investors approaching this sector?
Real estate has always been one of the most lucrative and favorable investment class amongst the investor. But again, having said that, in a couple of years that have gone by, we have seen this industry going through a lot of structural changes, which has brought the developments to a standstill. But again, having said that, it has set the industry on a path of massive fundamental reforms and change. So 2018 will definitely be the year where everybody would be hoping a recovery. But again, having said that, we will see a robust recovery happening only post this first half. The reasons are, we already have a lot of unsold inventory in the market, and also the new launches are a bit muted because the new launches of 2017 did not see a strong response from the buyers.
So we have seen multiple changes in the sector like RERA, GST, construction ban, ready reckoner rates being tweaked. Has this led to a shift in consumption preference?
Okay, so let's take it one by one. Now, for example, RERA and GST are aimed at improving the overall corporate governance and the structure of the industry, where RERA talks about timely execution, getting all the approvals. On the other hand, GST focuses more on keeping on the books of account, up to the mark, and all the financial disciplines that a developer needs to follow. So these two definitely were kind of things which brought initial business disruption to the developer side. Now, if you look at the construction permission ban that has been lifted in Mumbai, and you're talking about the RR rates kind of being brought down. So let's look at it in a different way. See, the construction ban being lifted is a good news for the developers in Mumbai because now they will be more focused on kind of executing their already stuck project. There were huge pressure from the RERA side for timely completion and delivery, and this ban was definitely hurting their effort towards timely completion of the project. So this is definitely going to be a shot in the arm for the already struggling developer community of Mumbai. Now, if we talk about RR rate, so RR rate, the provision has been kind of inserted in the gadget that apart from just deciding about increasing or maintaining the status quo, now the government can also think of bringing it down. So we are yet to see, once the government decides on RR rate, what's going to happen. But I think the government, looking at the current industry scenario, would definitely think of bringing it down, because there has been a lot of representation from the developer body to bring it down.
Hi Prashant, this is Nanta joining into the New Delhi studio. I think we've discussed plenty of what RERA, GST, etc. means to the property markets, but what I want to understand is that has the market now bottomed out? This is a sector which has been battered out of shape since for almost a decade now. Lehman Brothers crisis is going to be 10 years old. Are you seeing any signs of revival? And if yes, which parts of India, which cities or which segments of the market are showing signs of a recovery?
Let's start with the laggards. So, I think that's not an open secret. So, NCR market has been kind of definitely on the back foot, and it has obvious reason. It was predominantly driven by the investors, which have kind of abandoned the market. Again, having said that, certain pockets of Mumbai or let's say MMR region would definitely see a good recovery, and in fact they have started to see some green shoot during this Gudi Padwa. A lot of developers reported good numbers. And city-wise, if you look, if you have to ask my opinion, I think Bangalore and other southern cities like Hyderabad and Chennai would make a good recovery post the first half of 2019.
Okay, so those are some of the cities that might be doing better, but what about the commercial side, the commercial real estate? Commercial real estate is also considered to be an important indicator of economic activity panning out. Is that the case? For example, are rentals moving up?
The commercial as an asset class has performed quite well as compared to the residential part of it, and there are certain obvious reasons to it. So the grade A office, which were in kind of always in demand, and limited supply. So that was the reason, where the areas which had good amount of grade A supply saw some kind of rental appreciation, as well as the vacancy rate coming down. And the second major trend that we saw was a lot of companies or startups specifically were consolidating their operations. So kind of, they gave up their office spaces in certain areas which were not typically grade A, and kind of focused more on good quality offices. So we saw the rental trends in those areas firming up. Again, having said that, 2017 also saw a good amount of interest from PE funds in the commercial asset class, and this was obvious of the fact that most of the startups were kind of either consolidating, and we were seeing a lot of banking sector companies also taking up new spaces and leasing. So this was one of the reasons for the vacancy rates to come down and the rentals also to improve a bit.
Are you hopeful of a material uptick in the real estate demand trends in the next coming quarters?
We are quite positive on real estate as an asset class, and this short-term pain that we are going through was required to make this entire industry more robust and more organized. We'll see many corporate players coming in because of now the issue of non-transparency, in the financial terms, have been addressed. And if you look at the residential new launches and supply that have happened in the last 7 quarters and compare it with the sales that have happened, so an interesting trend that has come out is that your sales have outpaced the number of new launches that have happened. So in a way, what we are seeing is slowly the unsold inventory is coming down, not at a required pace that which we would all like to have, but again, couple of quarters we'll see that balance coming, and then we'll see the green shoot of recovery very soon.
Thank you so much. Sir, for taking out time for us. On that note, taking a break, back in 2 minutes, but stay tuned. An exclusive story coming up on the other side of this break. We'll also chat with the management at Sunteck Realty.